Hi, I'm Laura Flanders. A financial institution that you can run? Better than that, a financial institution that you and your neighbors can own and manage to reinvest in your own neighborhood? Credit unions, amazingly, are more or less exactly that. And they're getting a fresh look since the so-called Great Recession, which they weathered a whole lot better than many huge private banks. What's a credit union? How's it different from a private bank? And what laws hold credit unions back? To talk about that and more, we're happy to welcome Levy, CEO of the Lower East Side People's Federal Credit Union, to Grit TV. The Lower East Side Credit Union's been serving people and businesses on the Lower East Side and Central Harlem in New York since 1986. Hi, Linda. Welcome to the program.
Thanks. I'm happy to be here.
So tell us how much money you've loaned out since 1986.
Well, amazingly enough, we've loaned out $65 million.
$65 million. And who's it gone to?
It's gone to the people who live and work on the Lower East Side, and since 2005, also to people in Central Harlem. And it's mostly low-income people and local small businesses.
Describe for a little bit the scene in the Lower East Side when you started, and you were there at the start in 1986, right? The Lower East Side People's Credit Union. What was it like back then?
The East Village, Lower East Side back then was a lot of drugs. It was very impoverished. The city had basically abandoned the community. The banks had abandoned the community, which is why our credit union got started. So it was a very, very different place than it is now.
And you had been working in co-ops, but mostly food co-ops,
yeah,
consumer co-ops.
Yes, before that I had been working in food co-ops and got to the point where I felt that the food co-op movement was not really able to make major social change because of lack of capital. So I thought, let's see about finding a way to get access to capital for low-income people, and that's when I found out about credit unions.
So how do credit unions do that, and what makes them different from a private bank?
Well, credit unions are owned by their members, and they only lend to their members. So, for example, our credit union started as a credit union that served anyone who lived or worked between 14th Street and the Brooklyn Bridge, from Bowery over to the East River.
A couple of square miles, maybe?
And the only people who could borrow from us were the people who would join the credit union and were owners of the credit union. So all of the money that they put in went back out again into the community and never anywhere else. Whereas, you know, Bank of America, Citibank, they may have a branch in a neighborhood, but their money can go wherever they choose to invest it.
And on this question of ownership, who owns it and how's a credit union run?
Well, credit unions are democratically run. It's one member, one vote. So every member has the right to vote for the board of directors. The board of directors sets the policy. We have an annual meeting every year at which the members come and they exercise their vote. But the main points of it is that it's one member, one vote, which is very different from the way ownership is held in banks, where it's as much stock as you have, you get more votes.
And are they voting on who to lend money to?
The membership at large doesn't vote on who to loan money to, but we do have a credit committee, which is elected by the membership, and the credit committee makes decisions on who gets loans.
Now, I'm impressed by how much money you've all loaned out, but it's a pretty small proportion of all the assets that are loaned in financial institutions. In New York City, like 6% or something. It's very small.
Yeah.
Why is it? Why is it so tiny a proportion of the money that changes hands in this economy?
Well, for one thing, it's because we do only lend to our members and we only get money from our members. So I always like to say a credit union is only as rich as its membership. We are a low-income credit union. That's actually a designation by the National Credit Union Administration. And you know, since our members are low income, we are low income as a credit union. And so we don't have as much money as we might want to lend out. There was a point a few years ago, in fact, that we were loaned out at 125%. And that was pretty scary because we didn't have much liquidity at all, and we did have to borrow money to continue to lend.
Now, could public monies come through credit unions?
Unfortunately, in New York State, municipal deposits are not allowed in credit unions.
Now, what does that mean?
That means that even though a couple of years ago, Mayor Bloomberg made a big announcement, he was going to put millions of dollars into community development credit unions. Little did he know that he couldn't do that because there's a state law that says that all municipal funds must be deposited in banks, not credit unions, not thrifts, only banks. And when we've tried to change this law, as you can imagine, the credit union movement in New York has tried for many years to change this. The bank lobby gets very, very upset.
And now where does that law come from? Where does it date to?
I often think that they never even thought about credit unions, that they were just writing this law that money had to be kept in a safe and secure place. So they said, you have to keep municipal funds in banks. Well, credit unions are insured exactly the same way that banks are. And, I think that I really believe it was an oversight. They didn't even think about credit unions.
So what difference would it make if you could be a depository for some of that municipal funding? Meaning development loans, I'm imagining, other kinds of monies. What kinds are we talking about?
Well, I mean, they've talked about even the pension funds being put into credit unions because they want to put the money in an institution that will then put the money back out into the community. Community development credit unions, which we are one of, have an incredible track record of getting money out into the community. We're probably better at doing that than anybody else. And
how do you measure that?
Well, we measure it by the fact that all of our members are getting loans, and if they go into a regular bank, they're not getting loans. And all the history of redlining, the CRA laws, which wouldn't be there if the banks were willing to put the money into the communities by themselves. Under Community Reinvestment Act, that's the CRA, the banks do sometimes give us deposits for maybe $100,000.
So going back to what difference it would make if you had those municipal funds?
So if we had those funds, we would be able to make loans to our members. For example, our low-income housing co-ops. Right now, we have a lot of our membership is people who live in those housing co-ops or the buildings themselves. They have a lot of needs for capital, and we have had periods where we've had to say, sorry, we can't make any more loans. These loans are too big.
So here we have a moment in our economy where you've got banks famously refusing to lend out their money, sitting on trillions of dollars. Credit unions with the kind of track record you have, unable to get those funds. Is this one of the things you want to see change, for example, here in New York under the new de Blasio administration? Is it possible?
It would be great to see a change, though, as I say, because it's a state law, there's little that de Blasio himself or any mayor of New York or city council member of New York can do unless they can get Albany to change the laws.
But it's not just a city problem. There are city credit unions, I'm assuming, all over the state.
All over the state. And the Credit Union Association of New York has had this as one of their major efforts legislatively for decades. And every time those banks come in and they say, no, we were going to pull our money away from the legislators.
So you do have some initiatives on the horizon that you're excited about, if not that one. I hear there's a merger underway.
Well, yes, April 1st, we have accepted in a new credit union has merged into our credit union. This is Union Settlement Federal Credit Union. They're located in East Harlem. They've been around actually since 1957, and very sadly, they started to have issues and were struggling over the last 18 months. And we were really honored because they went to the regulator and said that they wanted to do a voluntary merger and they wanted to do it with us. We are now have Union Settlement as part of us. So their name is now Union Settlement Federal Credit Union, a division of Lower East Side People's Federal Credit Union.
And not to sound like a broken record, but would those municipal funds have helped that Harlem credit union survive?
Oh, totally. They would have, because they really were very short on capital, and they had, they just did not have what they needed to be able to serve the community, and in the end, it just sort of puttered out because they didn't have enough income coming in.
Now, for people that are anxious and they think, well, why would I want to get into financial bed with a lot of really needy people in my neighborhood? Your neighborhood, for example, is really divided between the super wealthy who have come in the last few years and those who are occupying those low income or even public housing units that remain. Why would someone who has some assets or some resources want to get into a financial institution where they're responsible for people a lot less well off than themselves?
Well, there are a lot of reasons. One thing is, look at what happened just a few years ago. Our credit union did not fail because of the crisis in 2008, 2009. So in one way, you might say that credit unions are actually a safer place to keep your money than some of these big banks.
Because you're not leveraging out to buy bad mortgage debt in other states and countries. We
also we're very, very careful when we do our underwriting for our loans. We don't want our members to get into trouble. We don't want them to take on more debt that they can afford. Whereas most banks, all they want to do is make the loan. They really don't care about your ability to repay. And that's another reason why it makes it a very safe investment and a very sound investment. And lastly, when back with Occupy Wall Street, we got a lot of new members because some people just feel like maybe I should be doing something good with my money instead of just making money hand over fist and earning more and more. And it is a good way of giving back.
So maybe we should shift all of our massive amounts of Grit TV money into your credit union.
You should.
All right, I'll come and talk to you about that. Clearly you love this work. I'd love you just to talk a little bit about what it's like doing it on a daily basis and whether you feel like you have built wealth in the way that you hoped to in 1986.
Yeah, one of the things about the credit union is that once you go in there, you can't leave. I actually was the first manager at the credit union. I left after 5 years. I stayed on the board of directors, and then I came back as CEO. I'm not the only person who's done that. And it's because there is something about the credit union and the atmosphere there and the feeling that everybody has that we're all really, I know it sounds corny, but we're a big family. And our members are a family. We really care about our members. We look forward to seeing them. We mark their anniversaries when they have babies. Everybody's cooing over their babies. My puppy came over one time. Everyone was all excited.
Can you bank online?
Yes, of course.
Do you have ATMs?
Everything. We have every service that a bank has.
All right. I'm going to come and talk to you about joining the credit union.
I hope you do.
I hope I'm in your catchment area.
We'll figure out a way.
All right. Thank you so much. Linda Levy, really great talking to you, and congratulations.
Thank you.